Hey everyone, welcome to Weekly Market Insights. I am your RV Raju Angadi Vishwanath, a SEBi registered research analyst from Traderz Hut. Come, let's have a sneak into the trade setups for the first week of May 2024, a truncated week, as we are seeing a May Day holiday on the May 1st. Let's see what the markets are panning out, how the markets are trending. Nifty has formed a shooting star candlestick pattern. Let me have a brief to you on the discussion regarding what the indexes fared at the last week before getting into the depth of the analysis and knowing the trends. So basically, Nifty on a weekly basis gained 1.23%, Bank Nifty 1.32%, and Fin Nifty 0.86% gains were seen in the Fin Nifty. So shooting star pattern is formed, a kind of a shooting star doji, and a spinning doji is formed in the Fin Nifty. So that's the broader viewpoint on the markets, like how the markets fared last week. PSU banks were the top gainers. Bullish sectors which led the last week's rally, the broader markets rally was witnessed. PSE index also gained with 4.28%, reality gained 4.62%, pharma 3.21%, metals 3.5%, anywhere between 3 to 6.5% gains were seen. Midcap Nifty also gained 3%, small cap gained 4.3% in the last week. So it is a broader market rally on a consolidation. Energy index was smiled by the spinning candle formation 1.5%. All of the major indices closed in the green. Sectorial indices: auto 2.3%, so media 2%, infra 2.26%, FMCG 2.35%, forming a morning star. If the continuation happens, FMCG stocks may gain. ITS gained 0.89%. So that's the overall view on the Nifty and the other indices, how the last week and the candlestick patterns have been formed. Let's get back to the charts, friends, how the markets have panned out and what is happening with a shooting star which can be halt of the uptrend which has happened in Nifty and the Bank Nifty, and some consolidation to correction may happen in a grinding way. So we would face a strict hurdle near 22,620 on a daily candle. Friday's candle was a piercing pattern after a rally, and the pullback until 22,552 620 levels are not crossed in the Nifty. Nifty is not out of the woods. So once we cross that level, the fresh bullishness may come in the markets. So basically 22, 5, 480 and 535 are the short-term supports for Monday. Monday and Tuesday markets are working. Wednesday market is an holiday, is what we are seeing as a May Day. So that's on the Nifty front. We are witnessing a sharp pullback. Then now the consolidation may get into the range 22,600 to 300 levels, plus or minus 30-40 points could be the range for the Nifty, as we have derived a range here 22,600 and 22,300, plus or minus 30 points to 50 points could trigger the range for the Nifty for the week. So as of now, charts are hinting that range rises should be sold. It would be a good opportunity to sell the rises until 22,600 is not crossed in the markets. So basically 22,484 and 22,540 would be the selling points for the Nifty. That would be the strategy for the next week for 22,600 as a stop loss, and downside 22,300 levels. If not protected, 22,200 and 22,100 we have some support, so those levels can be seen in the markets. So that's the Nifty view as per the data. 22,500 and 600, some good significant call writing is seen. So that would be an immediate hurdle. Unless that is taken out, we are not out of the woods. 22,200, some good put writing is seen. If that is broken, then there would be a huge trigger for a sell off towards 21,800 and lower levels for the Nifty. While coming to the bank nifty front, 48,500 good call rating is seen. There is no significant put rating in the 48,000 also, so the gate is open. 48,450 and 48,600 are the resistance zones. Above that, it would be bullish for the banks. And similarly, 48,100 to 47,950 is a support. Once that is taken out, 47,700 and lower levels can be seen in the quick span in the bank nifty. So 48,000 and 48,100 and 47,950 are the important points to watch out for the bank nifty. Upside 48,500 to 600 is a resistance for the banks. So that's the view on the bank nifty for the weekly as the charts hint. While fin nifty 500 to 600 becomes a resistance. So 21,480 and 21,640 becomes a resistance for the fin nifty. Above that, 21,800 and 22,100 levels can be seen in the fin nifty as the charts hint. While in the similar way, if we break the levels of 21,250 levels, fin nifty becomes weak. For 21,060 and 20,860 levels can be seen in the fin nifty. So basically 21 to 260, 250 is a very important point to watch out. The last 2 days low 21,269, so 21,260 to 250 broken. We are heading lower as we have formed a dark cloud cover kind of a pattern on the bank nifty as well as the fin nifty, and even on the nifty, but the confirmation would be only below the previous day's candle low is taken out. 21,385, 380 below the first shot would come, and 300 below the major move on the downside would trigger. Well, similarly 21,570 to 620 would act as a resistance. Unless that is taken out, we are not out of the woods as of now. The ranging candle has been formed. While coming to the midcap nifty has formed although it has formed a good bullish head and shoulder pattern. If we take out 11,020 and 11,080 levels, so midcap nifty is headed towards 11,200, 11,450, 500 levels on the midcap nifty. So that's next leg of up move trigger on the midcap nifty in the form of, even if it is a diagonal kind of a stuff, so the rally would continue to 11,400 to 500 levels, ending diagonal if it is forming. So the mid-cap nifty looks good. So on expiry of Monday, one can act on the mid-cap nifty to establish the trade setups. Above 11,020, one can buy the next week's 11,200 call, and similarly it would trigger the trade for 11,080 above. The fresh move come only the 10,840 below. The fresh selling will come. 10,930 would act as a support as of now for the mid cap nifty. While Sensex, we have seen again the similar kind of a pattern as we see weekly basis. Sensex has formed a let us have a check on the Sensex charts weekly basis. We have formed a shooting star kind of a candle. While if we break below the last 2 days low, 73,300 is very important. If that is broken down, then again we are headed towards 72,300, 72,400 levels on the Sensex on the downside, and upside is capped now towards 74,500 to 600 levels on the Sensex. So 74,120 and 74,550 are the resistance zone. 74,120 to 74,300 levels one can sell with 74,600 as a stop, and we can head in the right shoulder formation in the form of head and shoulders in an early pattern recognition charts are hinting where we can trigger a good move on the downside in the Sensex. So that is broadly on the index analysis. Overall, other indexes, reality index looks bullish. Watch out the reality stocks like Oberoi Reality and other stocks which are looking good on the charts. Now let us come into the stocks of the week. Before getting into the stocks of the week, if you like the video, do subscribe to our video YouTube channel for daily regular updates. Also, do get into the description below where we are given our free Telegram channel link to get the regular updates on the markets and our performance and stuff. We are a SEBi registered research analyst advisory firm. If you'd like to join our advisory live trading room or get into the training of options, how to trade the options, the best live and practical workshop on the options Zeta workshop. Join us. In the description, we are given the link below. For the more details, you can also contact us. So that's a brief about us. Getting back to the stocks of the week. Now the results are out for the L&T Finance. L&T Finance 170 is the resistance, 160 is the support. Either way breakout stock can give a very big move above 170, 176. The stock can head towards 190 and 200 plus levels. That's the one stock. Few of the other stocks which we are discussing, ICICI Bank results are out. Only on conditional basis, 1125, 130 levels. If we sustain in the ICICI Bank, then 1250 to 1300 levels can be seen in the ICICI Bank. So bullish on ICICI Bank on conditional basis. Oberoi Reality is looking good on the charts until 1440 to 460 levels are held down. Stock is headed towards 1600 and 1650 levels or 1700 levels going ahead. IDFC First Bank above 8630. The stock is 86 rupees. The stock is headed towards 92 levels, at least 92 to 93 levels. And once the 82 level is broken, if we are getting weak, stock is headed lower. So that channel breakout is there in the stock. If we cross 86 levels, 92 is on the cards. 92 plus 98 levels can be seen in the stock towards the fresh highs. So IDFC on conditional basis looking good. IRCTC 1060 to 1070 resistance. If we cross those levels, 1200 levels can be seen in the stock. While SBI is looking good on the momentum until 770, 780 levels are held on. Stock looks good for the more upside towards 880 to 885 levels at least on the cards. The bear move in the IndusInd Bank can come below 1430 to 1420. IndusInd Bank can crash towards 1360 and 1300 levels. So these are the few stocks which we have discussed for the stocks of the week, the trends on the major F&O stocks, and where there is a likely gains of some 5 to 8% can be expected. The swing moves in the stocks which we have discussed based on the levels, trade very objectively and decisively. Markets are at a very crucial juncture. Now I'd like to add the disclaimer. I am Raju Angadi Vishwanath, a SEBi registered research analyst. My registration number is INS 20,07584. Stock market investments are subject to market risk. Please read the related documents carefully before trading or investing. Do consult your financial advisor and do your own risk profiling analysis and due diligence analysis to establish your trades and plan your trades accordingly. I do hold certain positions and I'm a short-term trader also, or maybe in some index or stock options. This video is for the educational purpose. Do like our video and share, subscribe to our YouTube channel for the regular daily updates and other stuffs. So that's it for the week. Have a happy and prosperous trading week ahead. Signing off for now, your RV.